Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you as we delve deep into the inner workings of financial markets all around the world and try and figure out where they might be going in a week that has about 4 absolutely massive risk events in it. Let us, before we do all of that, talk about the disclaimer, which says that everything we're going to discuss this evening is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider it very carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the disclaimer is important. You should read it in your spare time. I'm happy to, if you would like, email it to you and you can stick it up on your wall somewhere. But the gist of it is that markets are risky, investing is risky, you could lose, and it's always you responsible for the stuff you do in markets and not me. With that out of the way, the agenda for this evening is very simple. You ask me about the stocks, commodities, bonds, indices, whatever it might be that you're interested in, and I'll give you my best technical analysis reader, or it could be anything to do with the world of trading, so money management, methodology, or mindset. As I like to do when we kick off these sessions is head over to the AMI Broker screen and start off with our portfolio management model. I'm pretty sure last week we said everything was hunky-dory, we were full risk position. At that stage, I want to say that if today is the 4th, then Monday was the 28th. Of October. I can't believe it's actually November right now, but there's the 28th. So we had that black candle to look at. We were nudging all-time highs. In fact, the very next candle actually made and closed at an all-time high. And then we got this one here, which would have been Wednesday, I'm guessing. Wednesday, Thursday and Friday we're seeing on screen. And particularly there, Thursday's candle, quite devastating, I think, for the demand side. They got a whacking and did not want to really come back at all during that trading session. So if we just zoom in, we're talking about the gap. So the high price here and the open price here was lower than the low price of the previous session. And that occurs when there's generally been a news event that's broken between market close and market open. It's significantly changed investors' views of fair value in the market. And then we start at a completely different price. Otherwise, as you can see, generally, the price action is fairly continuous from the day before because, by definition, the information flow is fairly continuous. Look, honestly, I can't remember what the deal was there. I wouldn't have a clue. Not that it matters. The key here is that we opened down, big event, big disconnect between perceived valuations, and the demand side had nothing. This is the point. The demand side had nothing in response. If anything, they got out of the way. And they got out of the way. We actually ended up with an above average volume day. So that indicates they didn't always get out of the way. There was some demand there potentially trying to buy the dip, but they were filled and filled progressively so all the way down. So that big gap, that big black candle is a pretty good indication for us to maybe just cool it a little bit. I'm not saying you're going to go away from a full risk position, but I think you're going to be more circumspect around adding further risk to the market. Or if you're going to add risk, and this will be really relevant tonight because no doubt you're going to share with me some great setups, we might want to pare back risk somewhere else. Something that's underperforming, get rid of that to add in something which looks really good, despite obviously market conditions which are more subdued than last time. This is not a panic stations kind of event. All the rest of the trends are fine, but it's something we need to absolutely monitor very carefully because let's look at maybe the last time we saw a bit of a gap and then a black candle. I think today's gap and candle is probably more severe than the one I've highlighted with the blue line here, and look what happened there. And given we're heading into, I think that move is probably more about just this week was always going to be a really crappy week for having risk on. And I think investors wanted to get out ahead of it. And I think that's probably more what it is. But if some of those things don't go the market's way, we could see something like this. It's conceivable that we come back and to some lower points of demand and potentially even the long-term uptrend movement. I hope that doesn't happen. But I can't tell you the future. Unfortunately, I can't tell you what the RBA is going to do or what they're going to say afterwards. The Federal Reserve, the Bank of England, and of course the US presidential election. Anything goes there. So pairing paring back risk, or not, certainly at the very least not adding risk. Okay, maybe paring back is even too strong a word, being a bit more cautious. The Russell 2000, how does that compare? Look, not great either, to be fair. Lower peaks. It's not a picture of excess demand, as we will often say about really good demand side opportunities. It's hardly a picture of excess supply either. We're seeing equilibrium, and that's probably the theme for the day. If we bring it home and look at the Aussie gauge of our portfolio management here, we actually showing lower peaks and lower troughs on screen. Compare that to the Nasdaq Composite, where we actually don't have lower peaks. We are going to make a lower trough, that's inevitable, but we don't have that reinforcement of the supply side that we are actually seeing here in the ASX 200. And for so long this was actually better, and ironically that lasted about 30 seconds, and now we're considerably worse. I think there is a reason here not to be full risk position, to probably pare back to 2/3. I don't think you need to be any more than that, but respecting the fact that we do have lower peaks, lower troughs, we have some decent demand side candles in the mix. That is our key candle there. That's the one that we need to deal with, and you can see how long it took to deal with this one. Eventually we did, and only then were we actually able to move higher, and then it became its own demand zone in itself. Interestingly, after this we didn't move into lower peaks and lower troughs. That's interesting. Here we have a more severe pullback, actually enough to change the long-term trend ribbon to neutral, hanging on to 81.07 for now. If we take out, and this is when you'll know something far more sinister is happening that's going to require further attention from you, that low there, 80.63, that's now the key level. Close beneath that, and more than likely we're going to see some sort of trade or some sort of price action in the dark green zone there, which is still very much heading up. So a little bit of a mixed bag, unfortunately, for our portfolio management this week compared to last week. Is there anything going on in any of the other global markets to tell us that maybe we should be even more cautious than what our portfolio management models are telling us? The CAC doesn't look great, but I don't think the world is hinging on what's happening on the CAC. The DAX is looking a little bit similar to us, actually, isn't it? Lower peaks, lower troughs, but still very much long-term uptrend and a little bit of more of an equilibrium at this point in time. Quite possibly, looking at some of these major markets, it's just a matter of getting through this week. FTSE is looking more like us, and not great, but certainly not terrible, and Spain neither here nor there. Heading over to Asia, very little movement. I think that's a good thing. They're consolidating, digesting those gains in China. The Nikkei looks okay, not great. India, actually, interesting there. That is a bona fide short-term downtrend. There's no doubt about that now. Long-term uptrend is still great, and it's still intact, I should say. Not necessarily great, but we are going to see some interaction with it, and it needs to hold. That's the Shanghai Composite there. So that is actually a pretty decent candle today. That's very encouraging. Having a look at the A shares, also very encouraging. So, look, China looking pretty good, and maybe it's a resumption of that rally in Chinese equities that takes us to our next leg of the bull market next week. Just having a quick look at the Aussie sectors, their discretionary sector, not looking ideal actually at all. Energy sector we know is the worst looking of the bunch. I wrote an article today about valuations if you're interested in it, but certainly justifying why the energy sector looks like this. And at the end of the day, charts, technical analysis is all derived from earnings. You would be foolish to dispute that. And the earnings here have been terrible, and that article tells you why the chart looks like that. If anything, financials, okay, in fact, quite good. Gold still intact, healthcare neutral, tech coming back pretty well, materials, okay. We saw China rally today. That could get interesting next week. Property looking under pressure here as interest rates have risen back up again. Staples, well, that's your Coles and Woolies versus the ACCC. A bit of a Woolies trading update there, looks terrible. Telecommunication looks fine. Utilities is not somewhere I would prefer to be. Let us quickly then have a look at the London Metals Exchange. We'll move over now to our commodities markets, and we're going to go to a line chart there. That's what I'm looking for, and hovering around the highs there for aluminium. No issues there. We're maybe looking for a little bit of consistency with some of those Chinese market moves. If we're seeing some strength here, that would be a good thing. Copper, very flat. Not seeing it there just yet. Iron ore seems to be turning down again from that supply zone. Nickel bouncing around the bottom. Lead, not great. Tin, not great. Zinc looking okay, but not as good as it was a couple of weeks ago when I got a little bit excited, but still probably the best looking of those base metals charts. Having a quick look at lithium now, very interesting trading last few weeks, really, couple of weeks, whatever that period is there. Noticing increasing volumes coming in over these few days, certainly above average on many of those days. That's an interesting session there, couldn't quite hold on to the highs. If it closed on the high, I almost would have said we're in for a rally here, maybe even up to that high 80s, 88,300, that high there. But today was a good close, closed above the top of the short-term trend ribbon there, I think. Hasn't done that for a while. Actually closed above this peak here, 77,350. Hasn't made higher peaks for a while. We're in higher troughs. A little bit of a demand zone here. Whilst it stays above that, it's not completely terrible. I wouldn't say that's a rampaging uptrend at this stage, but let's just say not looking as bad as it was not that long ago. I'm going to skip the other ones because I don't think they're that relevant. Look, we can look at spot markets here on silver. If we like, we're going to look at the futures in a second. Bit of a pullback to the demand zone there, and gold, a little bit of heat coming out of that market. Let's head over to the AIMI broker screen. That's not where I want to be. That's you lot. We don't want to be looking at you lot today, all due respect. So let me. And this happens when I start the session without actually selecting the Chrome screen I want first. So I can change it by filling time. That didn't do it. Let's try this. Let's try going to maybe the screen I want. And then if we come back to it, I hate this. Try again. No. It'll happen. It'll happen at some stage. That's the one. There we go. There's Victoria's Secret, which we'll look at a little bit later on. That's a suggestion from Jason. I have updated your daily scan lists this evening, and they have been regularly updated now each night around about 6 o'clock my time at the latest. Let us head to, didn't want to click that. Let's head to, oh gosh, now I'm all flustered. Let's head over here to our futures at Forex. And I said we're going to look at some of those futures charts. Critical level here for silver, it needs to bounce. It needs to bounce now, or it's in a bit of strife. Gold, I think, is still very much fine, although, big black candles, isn't it? What can you say about big black candles that close near their lows? They tend to ruin uptrends. Copper there, that candle looks eerily similar to the candle we saw on some of those Chinese equity markets. Hasn't been looking that great for a while, copper. Maybe we are going to get a little bit of a change there. And iron ore, dare I say, also logging a candle like that. I don't think anybody in financial markets put 2 and 2 together on these particular markets today, that is these commodities and the Chinese markets, but we're seeing potentially some interesting green shoots there. Uranium tends to move to a beat of its own drum. I'll put that in tonight's ChartWatch. That has broken down. If I put a line there, you can see that last little dash is now beneath that line. It's really now there's really no confusion here. This is again a long-term downtrend. This long-term uptrend is over. Is it like this? It's possibly like this. I mean, similar sorts of factors there. I guess maybe something good can happen again, but it's if it's not that, then it's probably going to be something far more sinister, as in, where I'm heading. something more like this, unfortunately. Look, I don't make the charts. I just analyse them. Uranium bulls, I'm very sorry. Let's head over to the crude oils. And actually, you got a little bit of a rally in line with those Chinese markets today. How about that? But still ultimately very much range-bound. Having a look at thermal coal now. Nothing doing there. And then having a look at the coking coal with iron ore prices maybe rallying a little bit. No response there either. Let's head over to the bonds where we'll finish this discussion, or this preliminary discussion anyway, this evening, and we're having a look at US 2s just coming off a little bit. That was not what I wanted, but interesting to see there. Well, they don't look as scary on the weekly chart, do they? But they're far more scary on the daily chart. I was going for the candles. Oh, it still looks scary there. I mean, we're just punching into that long-term downtrend ribbon. We don't want to get above it. That's going to cause issues if it does. And you can see the volatility here. Look at Friday's candle. Friday's candle is done frightening, and bringing it home to Australia here and our own locally rising yields. There was a little bit of a pullback today, which I think gave the Aussie market a little bit of breathing space. But by the end of the day, those yields rising back up again. And if we look at that's the twos, if we look at the tens, they're even more off the hook. And they are, of course, waiting, anticipating what Michelle Bullock is going to tell us tomorrow afternoon. For the people who could be bothered listening, because obviously it's Cup Day tomorrow. Good luck to you all. Let us head over to the offline requests and the AIME broker screen and back to equities land. And I'm going to click on that one. And we're going to go to Mick, who has for us SKS, which I was going to say had a pretty decent candle. Not yesterday, but it would have been Friday. And I put it in my watch list and feature list in this morning's ChartWatch. A little bit of a follow through today, didn't quite hold the highs, maybe a little bit of supply coming in from here. What do I mean by that? Well, there's some supply up here. So when things happen where we would absolutely expect them to happen, we're less concerned about it. I mean, if that wasn't a major point of supply and there was a bit of a shadow there, I'd be more concerned. But no, that all makes perfect sense to me. So I'm not too fussed about that. I still think overall the short-term trend candles, price action, all very, very good. And therefore, all I need to do here for you, Mick, is go copy and paste and put FRP there. I'm not going to put plus 1/3 on today's candle because it doesn't warrant it with that upper shadow. And then you might also want to think, well, what's our proximity to $2 where we intend to, or based upon my model, I intend to anyway, exit a third anyway. So what's the upside, I guess, in that if our downside is potentially because we need to hide our exit somewhere under here eventually. Okay, let's go to Mick's second one, which is CYL, which has been such an amazing performer all this time. You can see we've looked at it many times here, FRP 1/3, FRP 1/3. I'm going to certainly take the FRP. You know I can't take the plus 1/3 because of that last candle. Last candle is not nice. It's a nasty one, especially considering the positivity in these two candles and the market sort of gearing itself up for another run. There are investors now a little bit perturbed or a little bit miffed by today's black candle. We saw what happened with the gold price there, so no surprises. Look, I'm just looking at what's happening under here. I don't want to see it close too far under that low, the candle low that I've highlighted there, and that low is 330. If I got another black candle like today closing like a 327 or lower, just giving a little bit of room, then I think minus 1/3 would be order of magnitude where I'd be heading, but no more than that because of the rest of the trends are wonderful. So just taking a little bit off the table, a little bit of risk, de-risking the position, and respecting the fact that everything else looks fantastic, and hoping that on the next white candle high close above 360, we're adding that 1/3 back in again. That'd be nice. But some precautions potentially in the meantime. Let's go to Mick's third one, which is BIO. I didn't see that one today. But not surprising given some of the supply that has been lurking around. This candle here is a good one though. I think even despite that upper shadow, strong enough giving everything else to add a third. But I think today, you're almost backing out of that. Big volume today, took out a bunch of demand. Like there was a bunch of demand all the way down. So we know there's generally in the system here, right? Otherwise, how else can you get that uptrend? And this volume suggests today that much of that demand was met. How do I know? Lots of volume because there was lots of buying and selling. That's what volume is, buying and selling. Sellers selling to buyers who have cash, all right? Cash is now, that cash has shares and the sellers have cash. What a wonderful equation it is. So, yeah, not only is it bearish, the supply side was quite motivated, but the demand side tried to stop them and largely failed. I say largely because there's a little bit of a shadow there, coming in a zone of demand where we would expect it to be, sort of around there. And that's an important area, and I would say that, we've got some problems if we close beneath it. So white candle closed beneath there. Do you need to go today? I mean, we've closed beneath the short-term uptrend ribbon. That's not ideal. It's a big black candle. That's not ideal. But there is a little bit of a shadow, and there is plenty of demand here, and we haven't taken out any troughs, so that's working in its favour. And remember, I say, look, this is not a black box system, this is a common sense system, so what do you reckon? And there's no right or wrong answer. It's because all we're arguing about here is, well, do we take a little bit of risk off the table, and then do we take a little bit more risk off the table? That's all it is. We're just respecting the fact that that upside momentum is less certain. The probability of this rolling over is increasing. So look, I'll leave it up to you as to whether you would go 1/3 today. I'm going to say no, I don't think so. But what I would do then is if a close beneath here, right, it's not a 1/3 event. I reckon that's a 2/3 event, if you get what I mean. So I think it's just, that's your common sense coming into it, isn't it? So close, let's go close less than, that would be a -2/3. And we're going to make it red, because red means bad things are happening. No, it's just easier to see. Let's go to Peter B, who's got VYS. Oh, that's disappointing. And but Peter's saying, look, he bought around mid-July, so clearly, that's 30 cents. Now it's 44 cents, still doing really well. Has taken some off the table. Like, great, like perfect, and I can see why. Like, why would we have taken some off the table there? Because, there we go, lower peaks and lower troughs. See how it tried to hold? See how it tried to hold that, and then we went bop, bop, and let us draw a little line here. We'll draw it with that one. Draw an arrow there. And you can see how an area of prior demand acted as demand again. And absolutely, I think that certainly this candle here is your -1/3. There's no doubt about it, unquestionable. And I think today's candle is another -1/3 because it really isn't showing any impetus, any desire to go back up. And look at the candle before. You could actually have knocked a third on that one and almost be out of it here, or at the very most, you might have an affinity with the stock. There's something about it you really like, and you want to hold on to that final 1/3, which I'll put in brackets here because I don't think this is me, but you might just want to hang on to that final 1/3 until close beneath long-term trend ribbon, if that's you. I reckon we're pretty much done here on this one, and all good things must come to an end. I just want to find where the low of that candle is, because I want to draw a line under it and say that close. This is just me. This is just how I feel. If I was in this trade, I'm not, but if I was in this trade, this is how I would do it, because I know my market risk is tailing off, isn't it? I know I'm not adding risk at this point in time. I'm happy to let some stuff go and just reduce risk, get some cash back in the kitty, keep the powder dry. So why are we overcomplicating things here? Really? Like, does it have to be that hard? Always say that it should be just like one of those computer games where I don't know, I haven't played them for many, many years. I promise you, my son doesn't have any of these things, and he will never have them. He's got a push bike, he kicks a footy, he plays basketball out the front, he plays cricket, but he doesn't have any boxes, any consoles. But when you have them, as I said, I've played them in my past, and you sort of have to go through a level, and then you don't get through that level, and then you have to go through it again, but you know that level better next time, so you can get past it. We've seen these things before, so they shouldn't be any more complicated as close less than ZRP, but not just typing it on screen, actually doing it, because we just don't care about it anymore. We don't care about Vysarn. We never cared about it in the first place. If you're like me, the best bit is you wouldn't even have a bloody clue what Vysarn does, so you've got no attachments to it. Let's keep moving. Let's thank you, Peter B, for those. Peter B's also got Vulcan. See, that's a little bit disappointed because I thought it was starting to look good again, but stuff's happening exactly where we would expect it to happen. I can't remember the last time we looked at this one here, but I do know I definitely shortlisted it on this day. I'm not sure if I featured. I don't think I did. But yeah, remember in those shortlists, I'm not doing all the work for you because I don't have time to do all the work for you. You need to do some work for you. But I definitely look at this and I like the setup and I put it in, but I'm not going to go to that next step of tradecraft and say, well, yes, this is a wonderful setup, but it's about to smash into a major point of supply. And this looked pretty good here, but then this tells you the story, doesn't it? Like, okay, that makes sense. Today's candle is the one that's starting to break the camel's back here. But overall, I still think this is fine. I think you can still go full risk position because what I'm interested in here is whether actually it holds this and then has another go. Because I think the next one's going to get through. Like it smashed this thing. It smashed that point of supply. It took a bunch of supply out of the market. So it should increase the probability that next time's going to be the one. I don't like the fact that we're below this, because we shouldn't, the trough that we're going to make really shouldn't be beneath that second from last peak. There's the last peak. There's the second from last peak. There's a few things working against this one. I'm going to sneak in at FRP, but it is wearing my patience a little bit. But I can't find that smoking gun to get out at this stage. If, and this is going back in time, which is kind of I almost wish I'm not going to complete this sentence, but if you had got in, say, somewhere down here, and maybe added risk here, I don't know, added risk here, maybe. That candle in itself, when you think about it, at that point, is kind of a signal to just take some off the table. Is it not? Is it not? Like a minus 1/3 sort of thing. No more than that. Absolutely no more than that. But having failed to do that, because that is going back in the time machine, I can't see the smoking gun here that says we must be anything but FRP, but it's getting close. And I don't know what tomorrow's candle is. I wish I did this every day. I'm not sure if I can say that. Maybe every second day. And if we looked at it in 2 days' time, perhaps we'd find that smoking gun. Yes, let's keep moving. Let's go to Peter M. Peter B to Peter M. And Peter M wants SDI. Finally, something that looks good. And it's tough. I don't know if you've been noticing my shortlists each night are getting smaller. Those longs are getting smaller and smaller. And if you needed the smack around the head to let you know that, hey, maybe I shouldn't be all in risk here, it's my watch list getting smaller and smaller, because if there are, fewer and fewer great opportunities in a market, it's telling you that market is not as strong as it could be. So to see something like this is very encouraging. It's not going to be the norm today, it's going to be the exception, but it looks fantastic. It doesn't ring a bell, and I'm guessing it's because my minimum turnover filter there hasn't been met today, or on that candle there where I absolutely would have put it in, and on that candle there I absolutely would have put it in as well, and on this candle here I most definitely would have put it in. You can see that's why you haven't seen it at any of the watch lists. In fact, I probably would have put it in on that candle there. But Peter M has found it, and that's good, because if it doesn't meet my liquidity filter, it doesn't mean it's bad. It just means it doesn't meet my liquidity filter. We do all the usual analysis on it, and I can see when I go to the weekly chart here, I've got a bit of a supply zone. Now, look, you can draw a line, or you can draw a box. Where am I going to draw the box to? Or maybe to that shadow high there or that there. It doesn't really matter. Let me think about it. Let's go there. There's a little bit of a peak there. I'm tempted to go there. I can't decide. I don't want to make it too big, because, if we do make it too big, then it starts to have implications there. But it is diffuse. It is diffuse, is it not? So this is not a deal breaker, Peter M. It's just something you just need to be aware of, and it is a diffuse zone. So we're above $1. We've held it above $1, so that's the big hurdle, I think. So happy to own it, no doubt about it. That is not enough to dissuade me, that red zone, because the top of it is probably where it's going to be the main issue. And I think you can get 1-to-1 in there. That's my guess at this stage. So I'm going to go FRP. I don't mind adding plus 1/3 on this one. If you were say at half risk right now and moving to 2/3 risk in your portfolio, I don't know where you are. You could be, but if you're full risk, So no, maybe that means you need to get rid of some other stuff before you put this in. Let's go to Peter M's got another one here, SRG, which looks very similar. No complaints here. I think we're okay. Today's candle could have been better. Market was up, but it also could have been a lot worse. A bunch of other stuff that's looking pretty good. Didn't do a whole lot. There's really not a lot to say here. It's just copy paste an FRP. Not adding a third. I think until the next high candle. Next candle with a high close. So if we go next high close equals plus 1/3 then. But I don't think we need to do it now. They are all the offline Australian requests, so let's head over to you all, and you've been very, very patient there. Thank you. Avant saying hello, everybody. Hello, Avant. He's also asking for Lynas, which is an interesting one. It came up many, many times. I want to say that the first time I featured it, I reckon was there, and probably there next, and then probably there next, and probably not there. No, not that. Go check. It's all there in black and white on the internet forever. But I'm guessing that those are the three candles there that caused me to feature it in ChartWatch. I'm going to get rid of some of these other things because we don't need them. But we could say certainly that some of those old supply zones that I'm trying not to delete could start acting as demand zones. Certainly there's one there, and we might change that colour now to this. Obviously we got through that. I don't think that's all that relevant, but certainly I think there is a bit of a demand zone working through here. So if we take the top of that peak, because remember previous peaks tend to act as future demand zones, and use that trough there. And it's also corresponding with that one. I think that's about right. So there's your demand. It's probably a little bit kicking in down and around there as well. And otherwise, I think Lynas looks very good. Starting with the basics, which we haven't done very much in tonight's session, which we always should recap every session. Short-term trend ribbon is green. A short-term uptrend. Long-term trend ribbon is green. Got a long-term uptrend. The price action, that's not ideal. Yes, very recently we've moved back to higher peaks and high troughs, because you can see that wherever this next peak is going to be set, somewhere up there, it's going to be higher than that peak, and we already have higher troughs. So yes, we've got high peaks and high troughs, but some overlap in terms of this last trough and the second from last peak, which is up here, but we're in a consolidation pattern, so I can forgive it. That ideal world is nice price action. But we hit 8, not really a round number, but not impossible for something to stop at an 8. We come back, we vibrate, between that 8 and the old supply zone, now acting as demand. We're waiting. It's just a waiting game now for good price action and candles. And we're back into it. Today's candle is far from ideal, probably representing some of the supply here at that point of supply. And I'm guessing also that we're just probably dealing with something in the background here. So let me go weekly chart and see if there is anything that we are dealing with. And there's a little bit of a zone here, which might explain also the 8. So let me just put that or extend that across. Okay, so that's going to explain the 8. And actually there isn't anything else. So that's good too. So today might have just been a secondary reaction to this area here. So there's nothing here that's surprising me. This is now surprising me even less. Okay, so I think this is fine. Long story short, there's plenty to like here. I'm without a doubt going to be FRP. I can't see any FRPs on screen, so I'm going to take this one and I'm going to change it to FRP, but not plus 1/3 just yet. But certainly on the next high close, I can go plus 1/3 quite happily, and that's going to appear on your screen in a second. There we go. Thank you, Avant. I should read the rest of Avant's comment. It's saying it's looking very interesting to him. It's looking very interesting to me, Avant. He's not very confident of going long given the overall material sector. I don't care what the rest of the material sector is doing. I don't care what China's doing. I don't care what rare earth's doing. I only care about the chart, because the people who are making this chart, Avant, the ones that control the cash, that are seeking Lynas shares, are the ones that have Lynas shares that are either selling or not selling them. They've done all that work for us. Isn't that wonderful? Aren't they very generous with their time? So we don't have to worry about any of that. We just need to look at the chart. The material sector is underperforming. Maybe it is. I don't know. I don't care. Can we add some risk? I think I've answered that question. Let's go to Robert. Robert's got TMG, which is Trigg Metals. Okay, still looking good. They haven't come up on my list for a couple of days. I don't know what they've done. So they're still looking good. Yeah, look, you can see all the arrows when I probably, the last time we covered it, said that I featured it. So, I don't know, swing somewhere, give or take, from about 2 cents up to today, 5.5 cents. Not bad if you can get it. Last time we looked at it was FRP plus 1/3. Robert, you're probably wondering, is today that supply event? It's definitely not a species ending event, is it? If you can get that candle, and it's really not that bad, occurring, remember we had one earlier this morning, was Vulcan, and I said, well, like, it's pretty obvious why we've got that candle in that spot, isn't it? Is it really obvious why we've got this candle in this spot now? Let's go back, let's have a look. I don't think it is. So to finish that last sentence, if there was something really sinister going on and you've had a great run and you see that candle at that point that is really sinister, then you could contemplate, getting out a third. And I don't think that's what we're seeing here. There's a little bit of a dink here. Well, there's actually a bit of a dink here, isn't there? And maybe that's what's having the impact today. And you'd be surprised how these things do follow through. You'd be surprised what the market's memory is sometimes. And going through here, look, not far away from it, but I don't think it's a smoking gun. Okay, so I tried very hard for you there, Robert, to get you a minus 1/3 on that candle, because that's probably what you want me to say, so you can look at some profit. But I can't see it. So for what it's worth and for what's going to happen next, I think it's still FRP. I think that's a really small supply side showing in what is otherwise a tremendous demand side set of technicals, okay? And that's all I know. I don't know what's going to happen next, but I do what I know. I do know what I know, and the technicals still look very good here. Let's go to AZ9, which popped up this on Friday's list, but I put it in this morning. It's not there, so it's going to be... It's all right, it'll happen. Here we go. AZ9. And this was nothing more than a pure speculative turnaround play, as you would know when you see these things from me. Okay. In fact, we discussed this last week, didn't we? And we perhaps talked about a dink or something like that. I would have talked about next high close. Certainly, I ran it on this candle here. So for the people, I think we're looking at it maybe here, or maybe even here, I can't recall. For the people who've taken risk on it, I think you're okay. But understand, this is not a bet the house scenario. This is very much, if you're going to do a third, a sixth, whatever it is, just get some skin in the game to see where it goes. Okay, but I do think you want that skin in the game. I'm still happy with it. Today is certainly not a candle that worries me at all, and therefore I think it's FRP. Obviously, I'm not adding risk on today's candle because the candle doesn't warrant it. Let's go to YRL, which is in a similar boat. This is one where, no doubt, on this day here, it got my attention, and I would have been very frustrated because I love these things. I can't tell you to buy it though because I'm waiting for a dink. It took for a while for the dink to come, unfortunately, and it wasn't until that candle there that therefore met my criteria. It's still going. That's a good sign. Hopefully you're making money on it. Consider that today's candle in itself is a big demand candle. Don't let this one get too far away from you. Sort of somewhere around here, closing beneath that. It's probably had its run. This is going to be hero or zero. Just be in this one for a good time. Yeah, we're in this one for a good time, not a long time, but certainly FRP, no questions about that. I'm pretty sure I'm quite certain that I shortlisted it today. There it is. So that's the shortlist for today. Very, very short shortlist. Aristocrat Leisure, pretty obvious why that one's in the list. Brazilian rare earths, I like that one. A little bit of a turnaround play. It doesn't have a long-term trend ribbon, but I just love today's candle. It's almost a gap. Obviously, it wasn't quite a gap, but almost a gap closed on the high, above average volume. It's a 1/3 thing. See how it goes. Get some risk on the table. Car sales just impeccable as usual. Big base pattern. CBA is the best stock in the universe, not just the Australian market. P&I just keeps on keeping on. REA, similar to car. Sigma obviously just keeps on keeping on. Technology One keeps on keeping on. And YRL made the list. That's how we got talking about this. So if it's in my list, by default, it is an FRP plus 1/3. It's a skin in the game sort of thing. not betting your house on it. It might even be plus 1/6 at this stage, respecting the fact that it is so far away from the light green zone, but it still warrants the risk. And I want you, if you are this trade or this vertical trade virgin, I want you to lose your virginity, pop your cherry on one of these types of charts for what it's worth, even if it's $50 or $100 or the lowest your broker will let you put into it, just to participate in it, okay, and see how it goes, because you will surprise yourself. I hope it's the one that goes, because you know you've seen these and you've refused to buy them, haven't you? And you've seen them keep going. But it's just a skin in the game sort of thing, even just to convince yourself that these are valid setups, and they are. Because the normal response from the quote-unquote normal person is looking at it and saying, well, I couldn't buy that. But it is a picture of excess demand. Let's go to Zip, which wasn't far away from making it into tonight's list. So that'll, yeah, look, it really could have made it in actually, because just on pedigree. And some of them, they go in on pedigree without even the strongest candle at the end there, because just the pedigree is so good. And I'm looking at this now and probably thinking, I should have put it in the list, because it is really a very strong setup. And remember, it's in the list, I'm a plus 1/3 on it by default. And I think, look, the only reason why it stayed out, I'll be honest with you, the only reason why it stayed out, and it is valid, is I didn't like that candle. I don't like to see big black candles to get in the way. We do need to do a little bit of testing into it probably. And if that candle was even the slightest bit less black, today would have gone in. But really, I can't fault it. It's still very, very good there. Obviously, the FRP is probably the most important part for you, because I'm guessing you've already got it. So full risk position there. I can't see any reason why you would have sold any of your Zip shares up to this point. Thank you, Robert. Let's go to Rupam. Rupam, hi, Carl, can you look at these US stocks? Okay, I'll do those in a second. Donis has got for the US stocks. We'll do those in a second also. Brett has some Aussie stocks. We're going to do TOE, which is starting to look like a bit of a turnaround play, isn't it? So let's go back to our default zoom. Very important. We look at everything on a like-for-like basis. That's consistency. It's important. I like this. Look, it's really interesting. It's obviously turnaround setup stuff now, and I'm guessing that's why Brett is asking me about it. He wouldn't dare ask me about it until now, because he's probably been patiently waiting on, sweating on this one to dink in the long-term trend ribbon, for that long-term trend ribbon to turn amber, and therefore, yes, it is officially now a turnaround setup. So we can talk about it here. I like this. So we have a short-term uptrend, obviously, as tends to be the case in these turnaround setups. We do have a bit of a base pattern. We even have a volume event occurring at those lows. The price action, as far as I can tell, on the quick look, without drawing too many other lines in, I'm pretty sure, well, there might be, there's a little down one in there I've missed, but let's call it high peaks and high troughs. I'm happy with that. And candles, I think, very recently, not so much through here, but very recently back to predominantly white. And then we've got a bit of a dink through here. That's the key part of it. And then today's candle is very, very good. Volume is a little bit skewed, obviously, by the fact that we've got this huge event here. I don't know what that is, but if I squint, maybe it's kind of a little bit towards the average here, but the average is skewed itself. I wish I could see more detail in here, but until I get that out of it, the scale won't let me. Okay, that's all the good stuff. What's the not as good stuff? What would hold me back from this? When the red box comes out, we're going to start drawing in zones of potential supply. Look, even in there, we're actually sort of interacting with one now. Where is it? Maybe to the top of that candle there. And then we go back here and we just extend those across. That's not what we want to do. You can do this on your trading view very easily as well. And we'll do that like that. So you can see why we stopped there. It wasn't just the dynamic supply of the long-term downtrend ribbon, which, to be fair, this long-term downtrend ribbon has been incredible, hasn't it? It's been really, really solid at telling us where we shouldn't be trusting a fledgling short-term uptrend. Okay, and keep that in mind and be respectful of that. But I think there's enough here to give this a go. If you're that way inclined, would I do this with my money? No, I don't think I would, honestly. And that's because of where we are in the broader risk environment, what's happening with the portfolio management model, and probably I'm going to find stronger setups than this. This is a good setup, don't get me wrong, but I don't think this will be the strongest setup we're going to find today. But hey, you're not me, I'm not you. If you have an affinity with the stock, if you like this, and if only because you found it, and you want to give it a go, then you've got the green light from me. Okay, because it meets my criteria. I can't fault it in terms of my technical analysis model, which you all know well, and I think you agree it is consistent with that. So if you have it, it's a full risk position. If you don't have it, I'm happy to go plus 1/3. Okay, is the turnaround setup. Let's go to CHN, which was looking good, and we've had a little bit of some uncertain candles coming in here. But to be fair, the broader market for risk for these types of stocks hasn't been that great over the last few days. It's holding well though, and we can see here that the old supply zone in here, which it's not going to show up because it's being covered by the ribbon, is starting to act as demand. But if I sort of draw one there, you can see it'd be extending through there. Good candle today off the. Isn't it amazing how these ribbons work? I keep telling you that. I'm preaching to the converted, but look where the low, look where the low is right there. We're seeing those ribbons turn into dynamic demand when for so long that long-term trend ribbon certainly was dynamic supply, and even short-term trend ribbon was as well. I'm pretty happy with this. I'm going to go FRP. I don't think today's candle, as interesting as it is, warrants a plus 1/3 because of the severity of these candles here. Okay, so these candles really make me cautious in taking this next setup. Okay, so remember what I say about as bad as these are, the next few candles need to be as good. There's a balance here. It's hard to explain. It's a little bit subconscious for me, but I will know when I've reached that balance, and I think you'll get better at feeling this as well. And it might be a candle, so we can put a picture to it in your mind. It might be something that looks a bit like this, and we can probably even put a number to it as well. I know this is a common sense system, but some of you may wish in your own time to make it a bit more of a black box system and say, well, the balance point, if we look at, it's very sensible actually now that I'm thinking about it, if we look at this move from here to here, right, well, the balance point of that move in terms of supply versus demand, excess supply, well, to get over that excess supply, we needed to have more than at least half of that, right, to get back up the other side. So it's actually quite simple. If we take that high there, 209, and we take that low there of 176, take that difference, divide it by 2, and add it to 176, or take it from 209, and if we get a nice white candle closing above that, then we've at least undone the bad that represents, if you get what I mean. When that occurs, certainly I would go FRP here, and then obviously that makes sense, doesn't it? This is what I mean by next high close, therefore is a plus 1/3. Next high close in brackets over the balance point of the peak to trough move. I probably should document all these things one day. Let's go to how we're going for time. Not too bad for once. Perry's got some US ones. We'll do those in a second. Looks like we've got a bunch of US ones tonight. Francine has got Wisetech, which has been all over the place, and it's one of those times where the fundamentals will override the technicals. Stuff comes out of left field, and you all know the details, no doubt, by reading Market Index on this one. It's come back really well, actually. I think it's come back really well. It's held a long-term uptrend ribbon. Like, how about that? Like, just perfect. Just like that time and that time. Like, you can't fault it. And good candles. I wonder how we're faring in terms of this balance point. And I'll leave that to your homework, Francine. I think we're over it, or maybe we're struggling at it now. And look, this is maybe, I don't use Fibonacci specifically. You've never seen me draw a Fibonacci reversal, but you can see here where my thinking is always based upon demand and supply. And it's not based upon some stupid formula. It's based upon, does it make sense in terms of demand and supply? If there was that much supply coming down, we need to see at least half of that to get over the balance point coming back up. Some people say, you're just doing a Fibonacci retracement. Well, I guess in many ways I am, but it's got nothing to do with an Italian mathematician who was alive 300 years ago, okay? It just makes sense to me. And I want you to do that homework Francine. And if that's the case, then I think you can hang on to this. I'm not a buyer here. I think quite a bit more needs to happen for me to do that. But yeah, if it's over that balance point, then I think you can hang on to it. But just be very watchful, because at some point, if we start to do this again, then we're going to be in a bit of trouble. Like, if we're seeing that major peak supply being reinforced. Otherwise, if it's if the uptrend continues there, if the price action continues well, the candles continue well, then it's a see how you go thing. I'm saying maybe if you were caught in it, I don't think you should have been caught in it, because I think the analysis we did a little while ago suggests that you probably should have been all out of it by now. But if you weren't, in fact, Hoozle asking about Wisetech, so that's a pleasant coincidence. Also asking about SRG, which we did see. So if it's in the list, it's a FRP plus 1/3, Hoozle by default. We're very therefore happy with it. So plus 1/3. No questions asked. I shouldn't have to explain to anybody listening tonight why that is the case. Let's go to AL, which are very good. So 2 out of 3 of the ones you're asking for are on that list. I did think about it a little bit with that upper shadow, but again, it's pedigree here, and you'd be just foolish to mark this down. Right, mark that chart down, because it had a little bit of an upper shadow today. So no questions asked. FRP plus 1/3. Perhaps it's the FRP that's more important to you than the plus 1/3 Hoozle. Let's go to David. David has got GNG, which was looks like it's trying to claw its way back up, isn't it? We talked about balance points. We obviously talked about turnaround setups, which this is. So it's moved itself back above the long-term trend ribbon. We can see today's lower shadow indicates to some degree that long-term trend ribbon is now acting as dynamic demand, not supply. Short-term trend ribbon is not far away. Short-term trend ribbon itself is good now. It's very steep. It's supporting the price. The price action is certainly high peaks and high troughs, and there's good separation, I think, between last troughs and second from last peaks. The candles, I think, could be better. There's a few sort of black ones sort of blocking in around the place, but I'm going to say definitely predominantly white. So in terms of everything that's happened from September, it'd be a very warm 7.5 out of 10. The fact that it's going to deal with a whole heap of everything from probably around about here to here gets it marked down a bit overall. So it's not something I would say I would ordinarily gravitate towards. I just questioning the upside on this one. But if it's something you like, you've got an affinity with it, whatever it is, your green light for me anyway on a turnaround setup, but it's a next high close for me. I couldn't do it on today's candle. It would be next high close. Certainly FRP though, based upon everything we've said, and then next high close only for the plus 1/3. But having said that, I do want to question your reward to risk on this one. Okay, so if you're comfortable with that, I should read the rest of David's message, which says possible turnaround setup. It is correct. Significant points of supply. So he's seen all of these things. So that's good too. Between 230 and 245, so perfect. I got goosebumps because David is seeing the stuff I'm seeing. I didn't read your message, David. You know that because I would have read it. Otherwise, when I look at the 3-letter code, I start talking, and then as you know, as I tend to do, come back and then read the rest of the person's message. My point is, I didn't know you wrote 230 and 245 on there. So the fact that you've picked those is just fantastic. Let's go to Haraju, who's got PBH, which I still think looks very, very good. Today's candle is insignificant in terms of the amount of supply it's indicating in the market compared to everything else. This has been a regular in my watch list for a while, so hopefully you're doing well on it. There's nothing here that suggests to me we shouldn't be anything but FRP. Obviously, we're not adding risk on that last candle, but very happy with that one. What I haven't done as much in this session, and I think in the last few sessions, I used to do this a lot actually, and you would know this, I would go to great pains, wouldn't I? Of saying, well, this is what you need to look at. This is what would change that. I would say, well, I'm FRP, but this is what would change that. I hope you don't need that anymore. If you do need that discussion, then let me know. But maybe, today we're covering more stocks, but I haven't been talking about it. But I think you all know what you don't want to see, which is the opposite of all the good stuff. So lower peaks, lower troughs, predominantly black candles, what type of candles, closing beneath what should be dynamic support, and those short-term trend ribbons, those things I feel we should know by now, but I know there are always new people coming in. So if you're one of the new people and you feel that we're not concentrating enough on the getting out, then just ask the question. I'm happy to oblige. Evan's got MAQ and WTC. Obviously, we've done WTC. I'm surprised it's so popular today. There's no setup there, so I'm surprised it's so popular, but certainly I know some people, because it was looking so good, we had the fundamental event, maybe some people are caught in it and wondering what they should do. This has surprised me. I admit I got this wrong. I definitely ran it in the shorting watch this on those 2 sessions. I haven't run it since. And I got it wrong. It's powered back up, very frustrating. Probably I was a little bit too eager, I think. So if you're short, I think you're back to flat here, or at most a third in the market. There's no long there. There's no long setup. What would make it a long setup? You would need a dink and then some really, really good candles here, because I'm a little bit uncertain about this one. But hey, let's see it. Dink like that, really good candles. Ask me again. I might change my mind. Evan, ADH, because we've done Wisetech, obviously, is still looking good. Last time we looked at it, don't know, FRP, maybe it was this candle here. That's 29th, doesn't make sense because we only look at it on Mondays, and the Monday was the 28th. So we had that candle to deal with, so maybe that FRP is there or there. And yes, at that stage, we had nothing else to do but FRP. On this day here, honestly, I would have added risk to it. It looked that good. Market hasn't been all that kind, the broader market, and we're having a little bit of a pullback. It's holding well. That shadow and that shadow indicates there's still plenty of latent demand in the system, latent excess demand. This gap is holding well. This gap in itself is a point of demand, and you've also got this. I'm just going to draw that because I want it to be highlighted. So we're going to turn that into green and draw that across. But then I also want to draw the gap, because the gap itself is a point of demand. And we've got to remember that, because gaps are special. Gaps are created by a big change in sentiment. Okay, gaps themselves are points of demand. So I think as long as we're holding through there, that short-term trend ribbon's kicking in, and with today's low shadow, there's nothing else to do here but continue to be FRP. Obviously not adding a third at this stage, but that doesn't mean you can't on the next high candle. I think it'll be highly prospective if that occurs. Next high candle plus 1/3 if it occurs. If it doesn't, it won't. Let's go to Sue. Let's stop putting any new ones in. So Sue's got a couple here, but SVW will be the last request I'll take, and then I'm going to head back up the list and do the US ones. So he's got OPT, which it was looking great. You can see last time we looked at it around here, FRP. This is your problem. That would have been the candle that would have really got your attention soon, no doubt. In and of itself, yeah, look, I think that's a take action candle. You can't ignore that one. Let me change the colour of that. So we have something we can see. I'm going to get rid of this. Well, actually, before I get rid of it, I'm going to see what it is. Obviously, it was an old. Oh, there you go. It was an old point of supply, which we actually got through. Frustratingly, actually got through it. So that is disappointing that we couldn't really push on from that. The next one was up here, so it wasn't like so you could have sort of foreseen that the recent top that it made was in the offing. So I don't think it was. I think $1. Did we get close enough to $1 to take money off the table? Because that would have been our intent, close to the round number. No, we didn't. So that's not it. But I do think this candle certainly gets my attention. It's big. It's black. It's sort of taking out a few sort of candle lows here. There's no trough specifically through there, but I just think it's enough just to take the third, and that's all. That's all we're talking about is a third off the table. This candle is not ideal. I don't think in itself it warrants a third, but it's not far off it. That wasn't a follow through. That's a follow through. I think this is where I'm at on this one, and then if we get a close beneath sort of here, short-term trend ribbon, we do have some troughs in play now, and I'll give you a number. So that low there is sort of 80 cents. So I'm thinking like a 78.5 sort of thing. So close less than or equal to 0.785. I've got a numlock. Is for me, I think it's the final third, and I'll just represent that by going ZRP. That's where I'm at on this one. Of course, you do you. You might have a different opinion on how those technicals are playing out. Nicola's got, I should read the rest of Sue's comment, looking to go long on the next white candle. It would have to be one hell of a white candle, Sue, to warrant going long on this. Okay, I think, as you can see, we're stepping out of this, not stepping into it at this stage. Okay, what would change that? What would warrant the next white candle is pushing sort of into this now peak here. That's important. Little dink here, and then the next white candle coming up around here. Okay, so quite a bit needs to happen for us to get to that. Is the last red candle on 22nd of the 10th an issue? And I reckon that's this one here. Okay, there we go. Ended up talking about it. It is a big issue for me. Nicola asking for IMD. Second last Aussie one to date. Let's go default zoom. We can also see some stuff coming in now. I'm curious to see what that's all about. We got that there, and we got that there, and you can look. We're all good. We're fine, and I'm glad I had those in the system, because drawing them across, I think things make a lot more sense now, don't they? And why we're here and what we're dealing with. It should also show you that actually we're dealing with it pretty well. And today's candle's a little bit disappointing, but it's minimal in terms of the supply it represents, or excess supply within the broader context of an environment of excess demand. So I think this is fine. It's obviously FRP. There's no question about that. That last candle's not enough to push us off FRP, and then it's we're just next high candle plus 1/3 on that. It's very prospective, and no doubt, Nicola, when that occurs, you'll see it appear in my watch list again. Sue's second one is SVW, which is fine. Yeah, look, I mean, if you had taken some risk off the table here, and I think your order of magnitude of certainly minus 1/3 there, I don't think that's any question. And maybe if you did, not maybe, but I think if you did the minus 1/3 there, it's warranted, or I wouldn't, think you did anything wrong. This is definitely one that I think you sort of just hang on to that 1/3 in the long-term uptrend, and that's where you are. And I think that's all you've got here. I think, look, your FRP, but I'll put in brackets, I think at most you're sort of a 1/3 position here, because you probably should have been a little bit more active in the past. But I think it's fine. Happy to hold on to that one for now. It looks good. Oh, it looks better, doesn't it? Okay, let's head back up the list. Going to go to the Chrome screen and to our AMI broker, where we do all of our US stocks, and we're going to do the offline requests first, so don't forget them. Jason has DAY, which is Dayforce. Oh, a couple of big candles there pushing into a zone of supply, which is pretty clear from these peaks here. I'll go back to the daily chart and just double check what we're dealing with. And there's a bit there to deal with. And we might, therefore, draw a rectangle, and we're going to hit that. And what I love about TradingView is the snaps. I've got my snap on. How I got the snap, I can't remember, but I'm sure you'll be able to find out somewhere here. Maybe that's it there. Maybe that's the snap. No, that's not it. But anyway, you can do it, and you'll find out how to do it. You'll Google it. But I love the snap. I don't have that on AMI Broker. And we can see, yes, so literally where we are right now, Jason is dealing with that zone. We've had a good run to get here, but that is a very strong candle. So I'm kind of torn between great candles, expecting a bit of supply here. Do I want to take the risk in the current environment and fight that supply? For me, no. I don't think I do. I don't think I want to. And there's some really good reasons, or really good examples of why supply's been, or what supply's done to this one in the past around this zone. There's no reason to sell, because the candles don't warrant it, even on the basis that it's hitting a known supply zone. There's just no price action there in the candles to suggest that supply at this point in time, right? So yes, we're expecting some supply, we're just not seeing it yet. So you certainly wouldn't be selling. The question is, would you add risk to this? I'll leave that as a personal choice. I've already told you I'm going to sit this one out, but if you were that way inclined and you said, hey Carl, look, no, I really feel strongly about this one, certainly FRP, that's without question, but I don't mind. I couldn't give you a reason, a really strong reason why you mustn't, absolutely mustn't do it. There's no way you should do this. I can say, look, I can see what you're going for, do this, but absolutely go into eyes wide open. That's how I would counsel you on that one. Let's do Jason's second one, which we saw it in the intro there, VSCO, which is Victoria's Secret, and looking very, very good. Similar in that it is punching into, when we get to the weekly chart, I saw a little bit of a supply point here when I looked at this earlier on this evening. You see that there, not as well defined as the last one. A great little segue actually, because this is what I'm less concerned about. It's a small peak in and of itself. Like, it wasn't that big a deal back when it occurred. So it's going to be far less of a bigger deal here compared to the ones we saw before, which were really significant. So I'd be more happy to back this one, for example, to get through the supply zone than the last one. And it's actually not even there yet. It's got a bit of upside before we get sort of a 35 prospect. And we're at 30, right? And we're looking at not so much stops, but exits around 27.75. There's probably a 1-to-1 in there. I'm not going to do the maths, but you can confirm that for yourself. So in that case, everything else checks out. So we don't have anything that's really distressing us on that long-term supply. Price action's very good. Rising peaks, rising troughs, a little bit of a compression there, but that compression, we can forgive that. That makes perfect sense because that compression is in response to this. We've got through 30, not our first rodeo at 30, but the fact we got through it with a nice big white candle is very impressive. Short-term trend ribbon's good, long-term trend ribbon's just turning up. Not much, not a whole lot of volume on that breakout. I'm going to read that as well. There's not a lot of supply there. Demand's motivated, not a lot of supply getting in the way. So I'm happy with this one. Let's go FRP plus 1/3 and a nice little, a couple of stocks to get one after the other, because I think they help me make a good point on what is constituting supply that I'm concerned about and not concerned about. And who's also saying the magnet? It's the magnet that does the snapping. Let's go to Jason's third one, which is NWPX. And that's one frustrating thing about that. Okay, definitely got rid of that tool. NWPX, Northwest Pipe Company. Oh, wonderful. Can't complain about that. Going to have a quick look out the corner of my eye on the weekly chart. Can't complain about that. If it's not there, it doesn't exist, doesn't matter. So it's all good. And I'm just going to illustrate, because I felt that this one, just on that price action I saw in the weekly, I felt there was going to be something on the monthly, and there is. But I'm making the point here that please don't go to the monthly. It's like nobody from the GFC is still sitting on this one going, please God, just let Northwest Pipe go back to where I got in at the top of the GFC. And if they are, I'm guessing there's not too many of them around, and they shouldn't be a big deal. So if you can't see it on the weekly, my philosophy is it doesn't exist, and therefore we're all good here. I love that big white candle. I like it after the black one too. $50 isn't far away, is it? And that. Look, it's a logical place for us to spend some time, I think, but I don't think it's going to kill this one because it's not our first rodeo there. But that might be something you might keep in mind. Some nice supply removal there. You can see the volume sort of picking up the last few bars as we've got rid of that supply. That supply is now demand, so that's all good. I'm very happy with this one. Long story, which it was, now getting shortened into FRP plus 1/3. Click save. Thank you, Jason, for those. Peter M has TGTX, which is TG Therapeutics. Very similar charts, completely different companies. Northwest Pipe and TG Therapeutics. One is like an infrastructure play, and this one is biotech. So isn't that wonderful that the charts look so similar? It should prove to you that this is not about what companies do. This is just about how people respond to the earnings of those companies. Certainly there's some history here, but nothing to worry about until we're mid-35s and beyond. And given we're 26, it's not an issue at all. Nice price action, high peaks, high troughs. Last trough, respected second from last peak. So good price action, holding short-term trend ribbon well, out of a little base pattern here, bit of a volume push today, great candle, can't fault it, all good for me. And this is where trading gets hard in many ways because, we've seen that portfolio management model telling us to just cool it a little bit, and then you've been presented with some really nice setups. So I do think you want to be really ruthless with some of the ones that are underperforming if you're going to take on board some of this risk. There's no harm in just not adding, that's a great chart, I'll paper trade it, and just see how it goes. And, if the market crashes tomorrow, I'll be pretty happy I was paper trading it. If the market goes up, I've got a bunch of other stuff, right, that's going to benefit. You've got to have some discipline around these things at some stage. You can ignore what's happening at an index level, right? All right, let's go to your requests from the USA, or for the USA. Perry, welcome back, Perry. We missed you. Let's VSCO. Well, there you go, VSCO. So once again, coincidentally, Perry and Jason thinking alike. The twins there, the US stock trading twins. And you got the goodies, the chocolates from me there, Perry. So plus 1/3 FRP. Let's go to RVMD. Anytime I see MD, I'm thinking like a biotech stock. That's a great chart. It's my favourite chart today, I reckon. Let's go back to you. I don't reckon I'm going to see anything. It's going to be, that's close. Look, we're there, aren't we? We're there, and we're printing great candles. You would have to argue very long and hard with me to tell me that we're worried about that. I think we're dealing with it. Stopped at 50. Maybe that's where we dealt with some of that trepidation. But I think it's really, really good. Look, maybe there'll be a little bit of a consolidation here as a result, but I can't see it in the candles that I can see, which are all excess demand. So very happy with this. Yes, you're going to get a yes from me on that one. So FRP and plus 1/3. You go into these things eyes wide open. You're knowing now that's there. And if I see some stuff that, see some supply side candles, I know why they're happening. And I know I'm therefore more motivated to deal with them. Let's go to Perry's third one, which is IDCC into digital. Which it's like we looked at one of the early ones that had the black candle then white candle. So seeing some volatility coming in here, corresponding with that big black candle we saw on the Nasdaq, wasn't it? I think that was the Thursday. So the pedigree is sort of coming through here. And even on that day, it gapped up. It gapped up on the bad day and then just got beaten back by a bad market. And then just the pedigree came out here. So I can't fault this one. That's a very strong demand side showing. There's nothing there that suggests that we should be concerned at all by any overhead points of supply. $200 is a ways away, not worried about that. And certainly FRP plus 1/3, that is without question on that one. Thank you for each of those, Perry. Let's go to Adonis, who's got MSTR, which is MicroStrategy. Oh, that's annoying. Look, obviously we're FRP a couple of times here. I don't think that's enough to push us out of any risk at this stage. They're not great candles, particularly Friday, but it's still very much in trend. I think, it's so far away from the next trough, which is all the way down here. Look, down there, I'm more concerned. Another big black candle, low close, it could push you out of the third, but that's all we're talking here. I really want to try and give this one as much of a chance here, I think, Adonis, because ultimately it still looks very, very good. And it's frustrating that it has pulled back a little bit, but look, that's where we look at that portfolio, we know it's a bit of a tough market out there, and we see some really great charts, unfortunately, not follow through. So there's no major overhead supply zones that would be causing this. I think I'm still an FRP on that one. I don't think I want to change that just at this stage. Frustrating. Let's go to your second one here, Adonis, which now I'm wishing I had highlighted you. I've lost you. Ah, there you are. Go down to GDDY, which, okay, look, a bit of an oddball, isn't it? this one and this one, blend them together. It's not the prettiest of candle combinations at an area where we're expecting some supply. In and of itself, not enough to push me out of risk, but yeah, I think this one's pretty straightforward. It's just a matter of keeping an eye on it and not letting it close beneath here. And the snap does obfuscate things at times. But yeah, look, I think you're okay. Watching for confirmation of that, watching for close beneath that last trough in the short-term trend ribbon to manage some risk, but otherwise still happy with the FRP at this stage. And that is the frustration that comes with what the overall market is doing. Let's go to Adonis's third and final one, which is Walmart. And a little bit like our Wesfarmers. Look, we're fine here. Nothing to be concerned about at all. It looks a picture of demand still. And I guess that's the benefit of being so defensive. Certainly an FRP. Last candle, I could take it or leave it for adding risk. I just don't think we need to add a whole lot of risk at this stage, but certainly an FRP for me. Okay, if you're that way inclined, you want to add risk, next high close, you know the drill. Let's click save on that one. And going to Rapam, who has a few US ones here. Can you look at these US stocks? Good results for two of them, but fell the next day. Profit taking, question mark, I don't know. I can certainly say when we look at them that there might have been more supply than demand. Profit taking, you'd have to go and survey everybody who sold on the day and ask them why they sold. Oof. It's actually fine. Look, as black as those candles are, we've still, indecisive day here, but kind of got it out of our system a little bit there. It's still an up move. What do you make of that? Very, very unusual candle pattern here. It's just, look, I think this candle's occurring here. It makes a lot of sense why it's there. I'm going to say net, I think we're still okay. Look, certainly, if it's unusual, I'm going to struggle. if it ain't normal, I'm going to have to really think about it. Certainly beneath there, we've got some issues. In theory, we should have had some demand down here, and I'm going to move that in a second. It's just snaps, unfortunately. And maybe I'll take Hoosel's advice there and turn the magnet on and off sometimes. Just watch it. I'm trying to give you a staged exit if it all goes wrong. I'm hoping it doesn't go wrong. But if it does, that's where I want you to have some some defensive points. And I'm just pointing this out again. I know we've kind of tickled it, but this day is out of the ordinary. So a black candle, low close, sort of the first arrow. I think that's a third. I think that's a third. And depending on the patterns, you might even be 2/3 certainly beneath here. In fact, 2/3, extra 2/3 out. So a third and then zero risk position. Let me reiterate. I would be zero risk position on a close beneath there. That is a tricky one. I need to get easy ones towards the end of the session. Okay, not hard ones. Let's go to Rapam. Yes, CVNA, which is Carvana. And how's that one looking? Oh, okay. Well, good. Not good in the last candle, but good. It's played out well for you. Gosh. Talk about hard ones. Why is that happening there? Let me just set a zoom. Okay, it's just quicker just to go to the weekly chart, isn't it, than zooming out. There's a little bit of a level here, but nothing specific. There's nothing in that weekly that would suggest here. If it happened at 300, I'd be less surprised. Look, we're okay. It's just a matter of how much risk we're still retaining. If you wanted to do FRP, no question, that's fine. This candle is disturbing a little bit, but don't forget, the gap is the point of demand. I think I want to see another candle here. If you get a similar candle to tonight, then I do think you're going to go minus 1/3. So let's go next low close here, and that's all we're talking about. Because otherwise, FRP. So if I sound indecisive, it's only because I just want to really nail for you the point to get out of the third because everything else is magic. Okay, that's all we're talking about here. Let's go to, if it was at 300, I'd be more inclined to do 2/3, but I just don't see enough there from that history to warrant that at this stage. APP, AppLovin, is the third one here, and I've got to go ditto. Look, they're not great candles, but are you going to jump at every black candle you see? Is that a minus third? I don't think it is. I don't think it is. There's some stuff about it I don't like. It closed beneath that shadow, but it's still okay. Another black candle like that, I'm just going to go ditto for the last one. You see a candle that confirms that, closing sort of beneath, say, 156.60, then I think you're taking a third off the table, and that's the order of magnitude here. And that is it for Europalm, and I reckon that's it for everybody else. So I'll just double check the bottom of the list that nothing else has come up. It hasn't. So I'm going to head back to the PowerPoint presentation, therefore, and read you the disclaimer for the final time this evening. Everything we've talked about tonight is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it very carefully and consider all of those objectives and needs. Seek the help of a financial professional if it's still too hard to decide. Trading, investing is risky. Markets go up, markets go down. You could lose money. It's always you who's responsible for the stuff you do with your money and not me. Apart from that, it has been a pleasure chatting with you this evening, ladies and gentlemen. Hopefully you had fun, got lots out of it. I certainly enjoyed it. All the best for your trading until we catch up with you next time. Bye-bye for now.